Welcome back to another episode of Fun Friday with a incredibly special guest, a member of the corporate team sitting in Manhattan, New York City. We've got Sawyer Zimmerman, who has been in the company for, a year and a half or 2 years now almost. Time flies.
Coming up on 1 year.
Okay, coming up 1 year. Well, it's felt like so long with you. But that said, Sawyer is on the asset management team, and it's no surprise that asset management and property management, particularly in this point of the cycle, is kind of the determiner if a property will do well or not. And with expense ratios changing, with the climate of supply coming online, things of that nature really occurring in real time, who you have working on your properties has never been more important. And just before we get into the conversation today, Sawyer can appreciate this. I think our focus as a company, even from when Sawyer's got here from almost a year ago till today, has totally changed things. Or we've changed things with the focus is. Our emphasis now is really a company that asset management and property manage that also does acquisitions, as opposed to an acquisitions company that also has some property management and asset management arm. Sawyer's short time with the company, a year in the scheme of things of the tenure of the Lone Star company, Rob has basically stepped in to really focus on that side of the business, as opposed to when I was coming into the company, he is really more on my side of things. Then he trained me up and the other parts of the teams, and now he's really focused in the trenches there, which is the hard nitty gritty stuff. But we're very lucky to have Sawyer on the team. So with that said, let's get into you. What's your background? How did you get into the chair in the podcast studio that you're in today?
Well, first of all, I just want to say thank you, Craig. Very happy to be here and finally get to make my guest appearance on the podcast. Very thankful for that. A little background on myself. I'm originally from West Palm Beach, Florida. Moved back and forth growing up between there and Sag Harbor out on the east end of Long Island. I know Craig pointed that out between New York and Florida. It's very original of me.
I had to remind you.
Yeah, thank you. Always there for that.
Yeah.
And I went to Southern Methodist University in Dallas, Texas, and graduated in 2023. After I graduated, I was focused on a business venture that my older brothers and I started, and it was actually a boat rental company that we ran out in Sag Harbor, New York. It
East
was a
Coast to
lot of
East
fun.
Coast, just like I'm sure you played lacrosse too while you're at it. This is just very East Coast.
Whoa, I rode crew.
Okay, right. Okay. Did you play lacrosse?
I did not.
Okay, surprising, but crew makes sense. Very good.
So after I graduated, we were focused on really just selling the business because we were all becoming business busy with our own kind of lives and really just growing up. And it was more of a fun summer gig, but knew it wasn't built to last. So was focused on selling that, which kind of delayed my search for a full-time gig. And then really just turned on the jets. I've focused on or fo- I had a major in finance at SMU with a focus in real estate, and my real estate classes kind of always piqued my attention, my curiosity a lot more. I like the tangibility of the assets and everything, so was just dead set on real estate, and was lucky enough to come across this open asset management position at Lone Star Capital, and just saw that, just reached out to any email I could find and listened to every episode of this podcast as I was studying for all my interviews with everyone on the team, and was lucky enough to get an offer.
Yeah, well, here we are today. We're very pleased to have you on the team, and we look to obviously have you as part of the long-term core nucleus to the company because you've been doing an incredible job with the opportunities you've had at hand here. High level, can you talk about what the asset management responsibilities are? Because I think for each kind of company, each team, it looks different, right? Asset management, when some people apply to that position for us, they think it's more of almost a slight acquisitions role where they're doing kind of some of the debt stuff, some of the underwriting, the acquisitions, which is a fair thing to think about. But for us, it's just a skosh difference. So can you kind of talk about the day-to-day responsibilities, please?
Yeah, of course. And I would say you're definitely right in the fact that it is a different position at Lone Star Capital specifically because we are a lean team and we're very young as well. I will work with Brad on some of the acquisition stuff, but that's really not the focus of what our day to day is. Um, I would say the majority of my time is filled working with the on-site teams and just making sure that day-to-day operations are running smoothly. Um, it was a lot of staffing and making sure that we had all the right people in the right places, which we will get into later because staffing has been a huge part of the asset management position. But we're lucky enough to have had Hannah kind of rise and become the head of our HR, and she's spearheading staffing. We actually just brought on another HR generalist that is going to be unbelievably helpful. So really excited about that. So with that, just incentivizing the on-site teams with leasing and collections, uh, cost management and expense management, making sure that they're spending money where it's really going to matter, where it's going to in turn make us money, because it's very important to spend money where it's going to in turn make you money. So things such as make readies to lease those out, or different softwares that we've rolled out across the portfolio, such as Elise AI, which is very pinpointed and focused on leasing and collections. Other than that, a lot of what I've been doing this past couple days is something that we do every month and every quarter, and something I work with both you and Dasha on is our monthly and quarterly reports. So I'll have a few-minute conversation with the on-site team just to kind of get their perspective on anything high level that I'm missing that went on during the month or that quarter of the year, and put together the financial reporting aspect of it and work with Ina on that and compare it against the underwriting. So especially in that aspect of the job, we do have our hands in many different pockets, which is a really cool part of the job, and uh, something I know at least I was looking for in one of my first jobs breaking into real estate, to really just have a hands-on learning experience in every facet of the business.
Yeah, and it's pretty cool because you obviously get to work with, hand in hand with, Rob, with Ina, with Kent, with basically the power players within the company, the founders and stuff. So everyone gets to collaborate with one another. So you gets to really help you, learn the business and the process. Similarly, on my end, obviously, my training role is with Rob as well. So it's really nice to have that hands-on approach, the smaller team feel there, where everyone gets to learn a substantial amount more in a quicker period of time from the training and learning process in the day to day.
Yeah, I mean, having assets like Rob, Ina, Kent, Brad, yourself, Dasha, really, pardon me, really everyone on the team, and now Sam. It's just been unbelievable. The support and team that I have around me on this small team. I guess it's something you have to have, but it's not something that I expected. Like it's just unbelievable. If I want to know something about acquisitions, just straight to Brad, and he knows it like the back of his hand. You know, I don't know if you can teach me to talk how you talk, but if I want to know about business development, capital raising, and everything, I know that you'll have the answer for me. You
Yeah.
know,
Well,
as resident genius Kent, he's going to know everything.
right.
So I mean, just the team that we have, it's pretty tough to beat.
Yeah, no, we're really lucky that we are able to do that. And I think another point, and this is something that was not really kind of on the agenda, but as to what I wanted to get through, but it's a really an interesting kind of theme. If you're someone who is looking, if you're younger, if you're looking in the business, if you've got kids that might be looking to, apply for jobs in the future and stuff, it seems as if you kind of get a couple of options. Option number one is you can work for the big Brookfields of the world, the BlackRocks, the big name company there, the related, the Reliance, the places like that are massive, massive companies that have got, tens of billions of dollars of AUM, where you're one of, 1,000 employees plus potentially, one of a couple hundred there, if you will. Or you can work for groups like ours that are not kind of publicly traded, are companies that are not REITs, a company that is kind of privately owned with private investors, where you work directly with the heads of the companies there, if you will. There's no right or wrong, but it's a very interesting kind of perspective to have there as to what the options are in the workplace. But I think particularly if you're younger and you want to learn a little bit more and you don't want to be kind of stuck behind a lot of corporate bureaucracy. The smaller route to me is a superior option because you get to work with the founders, with people of that nature, and really develop your skill set, and can kind of get hired up with the company as the evolution of it does kind of evolve, from going from one place to another. And then also, your input in words are heard and are felt a lot. I mean, I'm sure you've had recommendations that you've had, Sawyer, within your time here. Being that you're a skosh younger than the typical person that might be in your position, but not lacking any intelligence, where you've made a recommendation and then it's been implemented quite quickly after.
Yeah, totally. And just going off what you were saying, in general, it really is all relative. But like you were saying, the smaller company feel is just, I mean, I don't know. I don't know how people do it at some of those larger companies. And don't get me wrong, they're obviously wildly successful, the companies that you were talking about. So they're definitely doing something right. But just having this small team feel with the culture that we have and just kind of the camaraderie and working with one another, um, it's you just can't beat it. And another thing that I really like, and that's really good for me personally, working at Lone Star, is the accountability aspect. Because although, like I was talking about, Rob and Ina and all these team members are at my disposal to ask questions to and learn from, they're not going to sit there and check my work. So I have
Yeah,
to
but
kind of
you have to
hold
be
myself.
right, and if you're not right, it'll be felt. And we've had
Yeah,
obviously some hiring, like any company, there's hirings and firings, but I think the team that we have now, I really love. So I think you feel the same
good.
way about that. And it's fun, fortunate because we are smaller. Everyone gets along very well now. So there's a lot of cohesion there, if you will. So we're very excited about that. So moving and switching gears over to properties and such, how many deals, how many units do you currently manage? And can you name them out for those who obviously are investors, people that work with us, to give them a feel and flavor of what deals that you're managing?
Yes. So my deals are, and I have to do it in alphabetical order every time or I lose count. It's Azul, Candlelight, Creekside North and South, Encore, Grand Riviera, Hollister, Park, Solano, The Landing, and Vizcaya.
Okay, so it sounds like you've got a couple places in Dallas. So you've got the two Dallas properties. You've got
Hmm.
the two properties in Texarkana. You got the property in Lubbock, and then it sounds like some coastal properties, and that's kind of your portfolio there, if you will.
Yes, exactly.
Cool. And then you've got some different vintages. You got all the way probably from 70s all the way to 2000s. So naturally, as you have different properties from different vintages, they're going to require and need different things, different kind of turnover, different repair, different level of staffing, right?
Oh, yeah.
So can you talk about maybe some of the differences as you look at property vintages and ages?
Yeah, of course. So where my mind goes first, when thinking about older properties, for example, we have Encore that's down in Seabrook, down near the coast. It's about an hour, and well, we stay in Preserve, which is up near Jersey Village. It takes me about an hour, 20 minutes to get down there most of the time. So people forget how big Houston is, but pretty large city.
Little known fact, very large, not only human population wise, but also land mass wise. From Katy to, East Houston to the Bay, that's quite some time.
Oh yeah, no, it's pretty ridiculous, especially the first couple times you're down there. It's unbelievable. Uh, but for the older properties, you're gonna have to spend a lot more time and money on repairs and maintenance in general. Uh, we've also found that, as many other larger companies have the liberty to kind of just vendor out as needed and spend all the money they want because they have super deep pockets and they've been around for 50 years. We're not at that point yet, and we have to cut expenses just that much more and cut costs wherever we can. So we try and do as much as we can in house. Um, we've had several instances where it actually is cheaper to bring in an extra person on the outside team, like an extra make ready. So at Encore, general rule of thumb for on site teams is about one person per 100 units, give or take. Encore's just under 300, but instead of three, we have four. And we've found that to be super successful, especially when we're bringing many things in house, such as pest control and valet trash, and just really keeping up with the curb appeal, keeping up with in-house unit turns. We'll vendor out paint and whatever where it's helpful to the team to just make sure that they're running as efficient as possible. But really, just you got to pay more attention to not letting things go, and deferred maintenance can become a real issue. So you got to stay on top of it because things can really fall apart.
Yeah, and with that said, curb appeal is super super crucial, and for those who don't know, it's very simple. It's how does a property look when you pull up to it, right? Whether it be residential real estate, multifamily, a restaurant with a certain ambiance, anything really regarding real estate. That factor and amenity of the first impression is very telling. And as you can imagine, let's take your mind here, right? If a property looks like there's trash around there, if it looks a little bit sketchy and uncomfortable, what do you think a prospective tenant or customer is going to think? They're probably like, oh, well, why would I want to work here, live here? There's probably going to be more crime. People are not going to care about it. And if the owner doesn't care about it, why would the tenant care about it, right? So making sure that you're not creating a slum and a favela for a living situation is very crucial. And as you mentioned, it's very easy to keep your eye off the ball here. And if you're not actively managing it and having, people like yourself, people like Liam, people like Joe and Ina and Rob really oversee it, and obviously Sam now with his position and role, having these people not look and oversee it is challenging. So you got to make sure your eye is on the ball there, and it's just kind of a day in and day out grind, if you will. I would say like it's a constant repetitive nature of doing stuff like that, worrying about collections, making sure that everything is on the ball. There's weather issues in Texas. Okay, well, this needs to get done. My situation is a lot more different, if you will. I do really big things and then I might have small stuff, but people like yourself are doing repetitive constant tasks day in and day out, which I really respect that, because I don't think I have maybe the mental makeup to do the things that you do.
Oh, well, thank you. I'll take the compliment. Not that I always think I have it, but I'll take it. But you're right. You got to stay on top of the ball, and you have to. There's a certain aspect of it, at least the way I think about it. You have to care a certain amount, because if you really don't care about what you're doing, you're going to get lazy and stuff. Like I was saying earlier, it's going to start to fall apart. So as long as you're staying on top of your on-site teams and you have good people in place there, um, like Rob always used to say, you have to have them acting like owners, like acting as if it's their own. It's just very important to have everyone top to bottom really having some sense of care in the game.
Yeah, everything is about buy-in, right? And it's hard to do that, but buy-in has to do with culture and making sure we've got the right people on our teams, making sure we've got the right staffing, which gets kind of the next conversation, which is you actually do quite a bit of hiring and firing. I imagine when you signed up for the job, you may not necessarily have done that, but you are constantly sifting through and going through talent. When you mentioned the amount of units you're managing, which is probably around, I would say, north of 2,000 units, right?
Yep.
It's a constant cycle of you hire someone, you think they're good, then they're not good, then you got to get them out of there, or you got to keep them happy. They're getting, if they're a good employee, they're likely getting pursued by other companies, right? They're getting poached. So there's so many moving parts on the asset management and property management team. That's why I don't want to do the position. That's not my mindset. That's not how I like to do things. Personally, I think that'd be really stressful for someone like myself. That said, the hiring process and kind of what we look for is totally changed, which drives on-site performance there, if you will. So can you talk about some of the implementations and different strategies that we've done since, I guess the last several months there, if you will?
Yeah, of course. So I think one of the largest things that's had a impact on the hiring process in general has been Culture Index. And Culture Index is a short series of, it's really just a bunch of words that we ask people to check off, saying, do these, like, check these off if they describe you. And it shows you, 100 or so words. And we ask them to fill those out, and then you press submit. And then it says, check these words off, and it shows you the same words. If this is how you should act in the workplace, and it shows you the same list of words, and people try and game the system. They'll try and check off, every single word that they checked off the first time, or they'll try and check it off so it'll make them look better. But as we learned during our workshop, there's really no gaming that system, and it's pretty foolproof. Rob and several other team members have tried to, but it's pretty good, and they have a lot of data to back it up. So that's kind of our first line of defense and our first barrier. There are different kind of archetypes and profiles that we'll look for different positions, whether it be our community admin position, our community relations manager, or a CM, a community manager position. And there are some certain profiles or archetypes that if you test like that and that's what you come up as, honestly, we'll toss the resume out and we'll never look at it again because we know what we're looking for and we know exactly what we want to stay away from. We know what's coachable and what's not coachable, especially at the on-site level. So I would say that's been a really big change in our first line of defense, and been in place for a few months now. But as I just previously mentioned, we don't have the normal on-site positions anymore that is normal in the commercial real estate multifamily industry. And this was mostly stemming from Rob's ideas and kind of breaking norms, breaking stereotypes, not necessarily sticking to the status quo. I know it's so weird, it's so unlike him, but we're finding good success in it. So the way it works is we'll bring on anyone at the on-site team that's in the office, not the maintenance team. The maintenance team is pretty much remaining the same for the most part, but for the office positions, everyone will start out as a community admin. Whether you have experience, whether you're lacking experience and you're pretty green, everyone's starting out as community admin, and they'll have about a 30-day orientation period. And this is because, as we all know, like there's a ton of turnover in the property management industry, and turnover is never fun. So we kind of, before things get too deep, not everyone's going to work out. We'll set up this orientation period and see if people are working out or not, and go from there. During this orientation period, and I'm saying this as if I'm running it, most of this is now Hannah Wyatt, our head of director of human resources, and Taylor, who is our new HR generalist. They're kind of spearheading this now and taking this off of the asset management team's head. But during this orientation period, what's happening is we're evaluating them and having performance discussions, seeing if they're more of a salesperson, like a natural seller. Can they speak to people? Do they have good social skills? Are they going to be able to lease apartments? And do they look like they're put together? Are they going to be a good first face to show when you're
Yeah.
trying to lease an apartment out? It's very important.
Well, no, it's really funny, and I start laughing because I just want to take this at a granular level. And so often, I think people just look at Excel spreadsheets, and that's how the business works. But actually, it's a people business, and you're acquiring a 50 million or 100 million or X amount of $1 million acquisition property that is ran by people who are on salaries ranging from $80,000 to $120,000 a year, roughly, right? And who you have there really matters. And obviously, the first impression is a leasing agent or something like that, right? What, I don't know exactly what our terminology is within our company, but someone who's doing something of that nature that's saying, hey, this is the apartment for you, choose this apartment amongst the other options in the marketplace, right? With constant and consistent turnover. So it's crazy, but it really boils down to the 5 to call it 3 to 10 employees on site there that really are the straws that serve the drinks. We can still be so great and we could be really sophisticated and sound really cool at Unser Capital in regard to acquiring deals, writing books, creating content, but it's all for nothing if you can't get this hiring process right and have people like Sawyer and Joe run the deals.
Yeah, like you were saying, it's super important with who they're first speaking with. People are gonna take a lot of stuff at face value. You see normal and put together people that can talk and converse and kind of sell you on why you should live at the property. And if the property's cleaned up and has a solid curb appeal, it's going to trend in the right direction for you. So we're placing a huge emphasis on this hiring pipeline, and we're choosing a path. We're Let me rephrase that. we aren't necessarily choosing for them. We're asking them where their skills are. What skills do they bring to the table? Are you better at running the books and more of the back office stuff and keeping the office organized and making sure that work orders are taken care of and running the property in general? Or are you going to be the face of the property? Are you going to be the community relations specialist or the community relations manager that is going to be interfacing with every applicant, every potential tenant, taking people on tours and selling them, telling them why they should live here? Are you going to be calling current tenants and asking them to renew and upping our renewal rates? And if they say no, are you going to further sell them on it and press back and say, hey, we'll give you a free carpet shampoo. Hey, we'll do this, A, B, C. We want to see what people bring to the table and play to their strengths.
Yeah, and it's funny. Someone could apply for one position, but actually, we might look at their resume or their culture index and say, "Well, actually, you'd be better here." So we're not putting good talent out the door. We're just putting it to its right and best and highest use, if you will. As I said, you wouldn't put me in accounting, right? You'd put me in the kind of position that I'm in right now. You wouldn't put me into asset management or property management. It wouldn't make sense. You wouldn't put me in acquisitions. So you just have to have that same mindset and have everyone's skills to be used at the applicable place. And our new policies and kind of our golden bible, if you will, with culture index has been kind of a lifesaver, and also one of the best screening tools and processes to really level up our company, our portfolio, and ultimately enrich our investors. And that's what it all goes down to, is serving the investors, serving the tenants, creating a safe and healthy environment for people to live in, and improving these properties as well, and making sure that it's safe and things of that nature. So those are kind of some of the missions that we look for. Is it's all going back to help our investors and obviously provide tenants a place to live in a safe community there. So that really is the emphasis for all of this stuff, to kind of holistically look at it from that view. That said, renewing leases and things like that's been a really, really important kind of subject that we're really focused on, because naturally when a tenant moves out, even though if you get $100 rent bump, well, now you've got to spend maintenance people to clean that unit, to get it ready for a new person to lease and rent, right? So can you talk about the importance of renewals and things of that nature, and how that's a big incentive actually within the company now to promote renewals and keeping tenants there on site?
Yeah. So renewals and obviously just keeping occupancy up in general. From the on-site level, it's it's kind of the basis of our business, if you will, is keeping the tenants happy and keeping them living there. Because if you can't close the back door, it doesn't matter how fast you lease. If there's a leak there, you're in trouble. So I think one of the most important things is and what it all really starts with is having a solid maintenance team. If you have a solid maintenance team, that in itself will take care of most of the renewal rate for you. But on top of that, going the extra step is, and it's something we've been talking about over the past couple topics, is it's all about customer service and hospitality. Reaching out, 90 days in advance and checking in with those tenants before their renewals and just, hi, checking in. How are you doing? Is there anything that we can be doing extra for you? Is there anything that you don't like? And then 30 days later, calling back, hey, are you ready to sign that renewal? Can we give you a carpet shampoo? Or, really what can we do to make you stay here? But like I was saying, I think that really does start with a solid maintenance team and keeping the property clean and everything running as efficient as possible. That's why we will see some renewal rates at some of our older properties with more maintenance issues be slightly lower. But I've also seen that counterbalanced by having, really sociable and salesy people in the office reaching out to those tenants and skyrocketing their renewal rate.
Yeah, I mean, it's just very important to make sure that they stay on site, that we can kind of retain them, because the drag is pretty crazy there, if you will. So obviously, Sawyer, with the market right now, there's a lot of supply coming online. This is kind of the biggest building boom. That's going to come to an end up here shortly, right? It's dropping off a cliff 2026 and beyond. But while we're in this kind of point of economic softening, or the economy not being the greatest for the last couple of years, while we're in an environment where rates are kind of higher, where the supply coming online, something comes up for competition that's called concessions. So how has concessions kind of been going on your end to get kind of people in our apartments been over the last couple of months compared to competitors? And for those who don't know, a concession is something that you give to a tenant to entice them to live there. A lot of places are doing crazy concessions, like places in Austin, Texas, are giving 6 months free of rent or 3 months free of rent, or giving you TVs or something there, a way to lure you in there, if you will. So holistically, how has that been looking in Houston and Dallas as you compare those two markets and what we're seeing right now kind of in the portfolio?
Well, thankfully, we're not doing what they're doing down in Austin. I haven't heard of anything like 6 or even 3 months or 2 for that matter of concessions. But you have to stay competitive with the other properties in the area, and concessions is a tool we use to do so. Um, One thing that I try and stay away from at my properties is giving a 1 month concession free up front on your first month. Uh, because we've found, especially in the Class B and C deals, that those tenant demographics will abuse that and, take that 1 month free skip, and then you're just stuck with that delinquency on your books. So I like to make sure they're there for a little bit. Maybe the third or fourth month, maybe $500 off, or uh, if you're in a submarket where the competition is giving a lot more concessions, we'll have to be competitive and do a full month off. But definitely want to make sure that they're a solid, qualified paying tenant before any concessions are given.
Absolutely. Yeah. I mean, it's a weird point in the market cycle. These things will go away at some point, but the economy being softer than anticipated is certainly making it challenging for the industry right now. But I can assure you, when you're going through problems in times like this, is when the investment opportunities are the most ripe. So the glass is always half full there, if you will. And if you're crazy enough to invest when the market was trading at 3 and 4 cap rates, you should be very excited for the deals that are 5+ there, if you will. So we're excited about that. Is there anything else that you would like to share that we haven't gone over, Sawyer, so far before we wrap up here?
No, not off the top of my head. I think we covered just about all of it.
Awesome. Well, thank you so much for your time today, Sawyer. If people want to reach out to you to learn more about your day to day, or if investors listen to this or partners, they want to learn more about specific properties, how can they get a hold of you if they want to reach out and connect?
Yeah, of course. The best way to reach me is via email. And my email is my first name, Sawyer, Sawyer, at live@lsc.com.
Excellent. Sawyer, thank you so much for coming on the show. We'll have you back soon, I'm sure. For the listeners here, we appreciate your time and we'll see you next week.
Thanks, Greg.